So with Tesla stock just barely going over $900 a share, it's got a lot of people wondering what's going to happen with the company's Q3 earnings. And in this video, we're going to be breaking down exactly that for you. We're going to be going through production estimates. We're going to be talking about upcoming catalysts. I'm going to be giving you guys my earnings estimate for Q3. And of course, we're going to be updating some price targets. So guys, you're going to want to make sure that you stick around to the end of the video on this one. So getting right into this, we've got a spreadsheet up on screen. And this spreadsheet right here is the same spreadsheet that we used when we actually estimated our Q2 earnings results for Tesla, which were right on the money. I mean it. Like, we were literally within pennies of what the actual Q3 or Q2 earnings result actually was, and our price target was even more on the money. I mean, our price target was hit the day after the earnings came out for Tesla. So yes, this sheet is tied and true. It's been tested. We know that it works very, very well on helping us estimate where we could expect to see, earnings come in for this company. So if you're wondering how this sheet works, of course, you could go back to Q2 and kind of just watch me explain it there so you fully understand it. But to give you a basic premise, basically this sheet works off of being able to plug in a delivery number that we think is going to be achievable for Q3, and then it's going to spit us out our revenues, our margins, and even our EPS figure to give us a new 12-month trailing EPS, which we can times by its current PE multiple to give us a new price target for that quarter, right? So you might be wondering, well, how are you going to figure out how many deliveries that we should expect for Tesla? And the way that we actually do this is by production numbers. So right over here, as you can see, we usually deliver more vehicles than we actually produce by about 1,000 to 5,000 vehicles. If you go back and actually look at the, the actual delivery and production releases on Tesla's investor website, then you can see that that is true. We usually do come in over on deliveries, as far as like we come in over the amount of vehicles that are produced in delivery numbers. So all we have to do is figure out how many vehicles we are expecting to be produced in Q3. And that's actually not too hard. There's a lot of sources online between Electric and people on Twitter that keep really close tabs on Tesla's production rate as far as how many cars per week these factories are pumping out. And what I do is I keep a really nice little factory estimate workup sheet over here as far as all the different gigafactories and how many vehicles are actually coming out of these factories at this time per week. And what I'm able to do is kind of put together different pieces of information and also keep track of different disruptions at these factories to give me an idea of, hey, this is how many cars I'm expecting to actually be produced in this quarter. So this is actually kind of my factory estimate workup right now. And as you can see over here, I have some notes about how this specific quarter, we've had some upgrades happening at the Shanghai factory, which is actually a really good thing for Tesla, that we're ramping up and actually getting some more vehicles popping out per week over here after this upgrade is done. We'll actually be seeing 21,700 vehicles per week coming out of the Shanghai Gigafactory alone. Fremont's got 11,500. Berlin was just barely upgraded to be about 2,000 per week, and Texas has been ramping as well to about 2,000 per week lately. So yes, things have been ramping up very, very well. Now, we have had some disruptions, though, for this upgrade over at Shanghai, and then there have also been some upgrades over at Berlin, like I said, and because of that, then that was down for about 2 weeks as well. Now, for the first little while, for the first 5 weeks, basically, while this disruption has been happening during July at the Shanghai Gigafactory, we found out that they were actually able to still produce about 38,719 vehicles for that disruption period. Now, what I wound up doing is, we still had about 8 weeks of typical production at 21,700 post upgrade. So we're able to estimate that we're going to see that for 8 weeks of the quarter, but we are only going to have, a few weeks, about 5 weeks right here for July of 38,719. Add those together, we see we're going to get 212 out of Shanghai, 149,000 vehicles out of Fremont, 24,000 out of Berlin, including this 2,000 disruption for it being down for literally 2 weeks, and we're going to get about 26,000 out of Texas, in my opinion, as far as production. So that should give us a production number of about 411,000 vehicles, guys. So yes, we have a pretty good estimate here on production figures for Tesla going forward. So this makes it really easy at this point. We go, okay, well, 411,000 vehicles produced. We usually come in actually higher than that, but let's put a little bit of a margin of safety in there. And let's just say that we come in at 405,000 vehicles, just to say that, I might be wrong. Maybe there's more downtime. Maybe we have other disruptions. In fact, here, let's even be more conservative. Let's just say 400,000 vehicles, right? Boom. And so as you can see, as soon as I hit enter on this, all these cells down here do fast math for me, timesing, the average revenue per vehicle delivered from the most recent quarter, by how many deliveries we see. It pops out my revenue figures. We're using these margins right here on these different sectors. So right here, as you can see, I'm using a 32% gross margin on the automotive sector. The reason I feel like that's safe to use is because we actually achieved that in Q1. And in my opinion, this quarter, we have even more reason to possibly see an even higher automotive margin than maybe even Q1, because we are seeing the most profitable factory, Shanghai, start to ramp and actually get even more production. So the more production that's actually coming out of that factory, it's not necessarily there's going to be a whole heck of a lot more workers. So the actual margins there actually are going to get even bigger. So to me, I feel like this 32.9 is very obtainable. Right here on solar services, as you can see, we're running that at a negative margin. So usually this actually loses money, or at least over the last 5 quarters, it has been losing money. Last quarter, it actually wound up making a little bit of money. So that was good. So this is actually another little bit of a margin of safety built into the sheet. If we were to go off last quarter, we'd be having this either flat or with a little bit of a profit made there. So total gross margin, you can see that I'm expecting for Q3 is about a 29.62, so right around a 30% total gross margin for the company. OpEx usually runs, OpEx, interest, income, losses, and taxes, all that different stuff usually comes in right around 14.33%, so that's about $3.6 billion, leaving us with a net margin of 15.29% or $3.87 billion for Q3. So now that we have our net margin figure, it's pretty simple from this point. All it does is it takes that net margin and divides it by the diluted shares outstanding and gives us a Q3 EPS figure, or our estimate for earnings results. So my earnings estimate for Q3 is I think that Tesla could come in at $3.35 a share, which would bring our new 12-month trailing EPS up to $10.23. So now that we have that new 12-month trailing EPS figure, it's pretty basic. We come down here, we can see that we're actually trading for a 12-month trailing EPS or a 12-month trailing PE figure of about $122 right now. Now, for me, for using the price target, I want to be a little bit conservative because I personally think that Tesla has gotten a little bit overextended since our last quarterly report. I think people are kind of getting pumped up for these next few reports this year because I really do think they're going to have a good second half, and I think a lot of other people do too. But we're going to be a little bit more conservative, building another margin of safety here, and estimate it at 100 PE for Q3. And as soon as we do that, really easy, it pops us out our results. So right there, that is my price target for Q3. I think that if we can achieve these numbers, if we can achieve 400,000 vehicles at least coming out of these factories, which I think is a pretty obtainable goal really for Q3, we could see the share price go to $1,023 a share, or a 13.66% upside. So yes, this is part of why in my $10,000 account series that I have here on the channel, I am so heavy in Tesla. I swear to God, this company just keeps on outperforming estimates over and over again. And I think this last half of this year, there's going to be a FOMO cycle of people trying to get into Tesla because they're going to be seeing these crazy numbers being achieved over there. And I think a lot of people are going to want to be part of this, right? So on top of this, what else could possibly justify this share price and, justify seeing at least 100 PE by that time? Well, as you can see down here in these notes, we have a couple of exciting things happening actually before we wind up getting the Q3, earnings announcement. We actually are likely to see, Tesla announce another Gigafactory this year. We found that out at the Giga Roundup or whatever it was at Texas for the share earnings for the shareholder meeting. And then on top of that, we have AI Day coming on September 30th. And AI Day, guys, this is going to be an extremely big catalyst for the stock, as we may actually see an Optimus robot prototype. No promises. Elon will promise it. Nobody's really promising it, but we could see a prototype for this Optimus robot. And everybody that's been kind of following the company, they know that Elon has said time and time again that the robot might be a bigger part of the company in the future than the actual car business itself. So to see a prototype of this thing is going to be extremely exciting for a lot of the shareholders. And I think a lot of people that might not already invest in Tesla, depending on how impressive this thing is at AI Day, you might get some FOMO into the stock, which could, again, help lift this PE number, or at least maintain it up here at about 122 where we are today. Now, on top of that, they also were talking about a little bit that shareholder meeting, like I was talking to you about, that they are seeing themselves building possibly 8 more factories in order to hit 20 million vehicles produced per year by 2030. So that's a pretty bit ambitious goal there. But I mean, Tesla, they have proven time and time again that they can hit these ambitious goals. Yeah, sometimes they're off on their timelines for product releases, but as far as actually achieving the numbers that they set out to achieve, they're pretty dang consistent and they're pretty dang good at it. So I'm not going to say that that's impossible. It's definitely ambitious, but it's not impossible for them. And then, of course, we're closer and closer to FSD. Nobody knows when this is going to happen, so this isn't so much of a catalyst per se. But Elon's been telling us all year that we're getting closer and closer to that. And as soon as that happens, then that is just going to generate some huge profits on FSD with the robo-taxi network coming here in 2023 with the robo-taxi announcement and everything like that also coming later on. So to me, I think that the closer and closer we get to FSD and the closer and closer that we get, we're going to see more and more people releasing beta footage of this thing just being an absolute beast out there in the wild on the streets. And I think that that footage out there actually helps people try and invest in the company as well. So now, as I promised you guys, let's talk about my end of year price target for Tesla. So let's jump into my big sheet over here, this complicated monster looking thing. And again, we'll be conservative right here, even though I have 411 plugged in. Let's go ahead and just type in that 400,000 number that we talked about. Missed a zero there, but we'll go ahead and type in that 400,000 number that we talked about over on the other sheet. And for Q4, I really do feel like they're going to be able to achieve 475,000 vehicle production. The reason I feel that way is if we come over here and kind of take a look at this sheet, you can see that really quarterly, they should be able to achieve about 483 so long as everything goes smooth. Now, of course, there's going to be downtime sometimes, so that's why I'm saying 475 for Q4. But of course, these two factories over here, Texas and Berlin, they have nothing to do but ramp. So this could even go up by Q4. So 475, I feel like, is a pretty dang conservative estimate for Q4. So if we're able to achieve, and just so you know, this basically works the exact same as that other sheet, but just on a more grandiose scale. But yeah, if we're able to achieve those production numbers, I really do feel like we could see Tesla sitting at $1,287 a share by the end of this year, guys, which would be about a 43% upside from where we currently sit at right now. So yeah, pretty exciting stuff in regards for Q3 and end of year price target for Tesla, guys. Now, if you guys enjoyed this video today, please do me the favor of hitting that like button down below, as well as hitting the subscribe button below if you're not already subscribed. We're going to be doing these Tesla quarterly estimate sheets every single quarter going forward. So you're going to want to make sure that you are subscribed to the channel so that way you can make sure that you watch these every single quarter before they happen. I'm pretty sure that we're going to be hitting these estimates right on the head every single time, or at least I feel pretty dang confident in my ability to estimate Tesla's numbers going forward. So guys, until next video, peace.